Hello everyone and welcome back to the discussion on GST Indirect Taxes, Paper 4 Taxation of the intermediate course of Institute of Chartered Accountants of India. This is your second session and we are conducting the live revisionary classes. In the first session in the morning, we have discussed what is supply. We have discussed what is charge of GST. We have discussed what is time of supply for goods as well as for services. And in the present session, we are going to discuss valuation of supply and input tax credit under GST. Friends, valuation is important. First of all, let us understand what is the requirement of any valuation mechanism under GST. I am a chartered accountant. I provide services to Hindustan Unilever for suppose 1 lakh rupees. The same services I provide to some X Limited for 1,000 rupees. Same services I provide to my relative free of cost. The same services I provide to an international entity at 10 lakh rupees. Now, the services are the same. The supplier is the same. The only thing that has changed is the recipient and the size of the recipient. And basis that for the same kind of service, when done at 4 different levels or when done with 4 different set of people, is resulting in 4 different types of value, 4 different types of valuation. Now a question should arise whether this separate value should be considered as the correct value. Moreover, let me give you another example. I go to buy this pen. This pen is sold to me for suppose 2,000 rupees and the shopkeeper sells this same pen to his nephew for 200 rupees. Now, for me, when he sold it to me for 2,000 rupees, he paid the applicable GST on 2,000 rupees. When he sold it to his nephew for 200 rupees, he charged the applicable GST on 200 rupees. Now, what is correct? 2000 is correct, 200 is correct, or both are correct? So, basically, there was a requirement to have a measure of standardization so as to ensure that there is no undervaluation or overvaluation. So, undervaluation is usually to avoid the tax, overvaluation is usually to pass on surplus credit. And that is why valuation mechanism has been embedded under GST. Now, this valuation mechanism ideally talks about transaction value. It says that for any transaction, the value at which GST should be paid should be the transaction value of that product. And the transaction value is dependent upon two factors, that the supplier and the recipient should not be related. That is, they should not get covered under the definition of related persons. And second, price should be the sole consideration. That is, the price which has been charged should be the sole consideration. There should not be any direct or indirect other consideration flowing against that transaction. So, if for any transaction, suppose I did that transaction, I gave you an example that the shopkeeper sold this pen to me for 2,000 rupees. Now is 2,000 rupees correct valuation? Is 2,000 rupees the transaction value? Supplier and recipient are not related. There is no relation between me and the supplier. Price is the sole consideration. Yes, price is the sole consideration. Hence, 2000 rupees is the transaction value. Applicable GST, correctly paid, correct value. Now let us take up the second example. He sold the same pen to his nephew for 200 rupees. Is 200 rupees the transaction value? The first test is supplier and recipient are not related. And are they not related? They are related. And if they are related, then 200 rupees cannot be accepted as transaction value, and hence we will have to move to valuation rules in that case. Now, one important thing that you need to understand here is, in valuation, section 15 provides for this transaction value part and talks about valuation in the CGST Act. And thereafter, there are certain rules embedded in CGST rules which talk about the valuation aspect. The rules which are there are not in your present intermediate course. The valuation rules will be a part of your CA final course. So presently, we will restrict our discussion only to the course contained in section 15. Now, section 15 provides for certain specific inclusions कि आपको ये चीजें तो अपनी वैल्यू में इंक्लूड करके ही चलनी है अगर आपको जीएसटी के हिसाब से ट्रांजैक्शन वैल्यू निकालनी है किसी ट्रांजैक्शन की. क्या चीजें हैं सर? टैक्सेस, ड्यूटी, सेस, फीस एंड चार्जेस लेविड अंडर एनी अदर लॉ. बट जीएसटी में तो सारे टैक्सेस सब्स्यूम हो गए. ऑल द टैक्सेस हैव बीन सब्स्यूम्ड. तो हम कौन से टैक्सेस की बात कर रहे हैं यहां पर? We are talking about customs duty. We are talking about if there are any other taxes levied. So basically, customs duty हो सकता है. There could be or any other local levy which has survived the GST regime. So those types of taxes, primarily GST will be applicable over and above that. So I will give you a practical example. Suppose you import this mobile phone for 10,000 rupees. On 10,000 rupees, first basic custom duty will be levied. Suppose that is 1,000 rupees. And GST will then be levied on 10,000 plus 1,000, that is 11,000. Here there is a small clarification that TCS, tax collected at source, which is collected under income tax on specific transactions. GST, the value under GST shall not include TCS. So TCS is not to be considered. And hence, while other taxes, duties, cesses are to be included, TCS is to be excluded. Okay? Any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of supply and not included in the price actually paid or payable for the goods or services or both. So what does the law provide here? The law says, suppose I am a chartered accountant. I am providing services to suppose LG, and the services provided are worth 10 lakh rupees. Now, I have bought some product for the provision of such service. I have bought an LG monitor. That is, I required another system in my office and LG monitor was required. So I bought an LG monitor from their dealer. And I asked LG, you have to pay me 10 lakh rupees, pay this for this monitor here, pay the rest of amount to me. So basically what I'm doing is, my contract with LG is for provision of 10 lakh rupees of service, right? Suppose that monitor is for 50,000 rupees. Now, generally, the transaction would have been that I buy that monitor for 50,000 rupees. pay the applicable tax, avail the input tax credit. Thereafter, I bill for 10 lakh rupees to LG, charge the applicable GST, and LG avails credit of that. But now, since I have asked LG to pay to that distributor, I will only be raising the invoice of balance 9,50,000 to LG, and hence there will be effectively non-payment of tax on certain portion. There will be no tax escapement, but non-payment of tax to the extent that first the government would have received tax on 50,000 rupees from me. Thereafter, on the entire 10 lakh, they would have again received the tax. But by directly making LG liable to the dealer, I have avoided tax payment at 2 stages. So this is where the government says any amount that the supplier is liable to pay, but which has been incurred by the recipient, that is LG, and not included in the price actually paid or payable. So the price actually paid payable was 10 lakh rupees, whereas I am saying I will pay, you pay me only 9,50,000. Clear? Incidental expenses, that is, including commission, packing, charged by the supplier to the recipient of a supply, and any amount charged for anything done by the supplier in respect of supply of goods or services or both at the time of or before delivery of goods or supply of services. So basically any incidental expenses which would have been incurred, that those also need to be considered and included for the purposes of deriving the valuation under GST. Interest, late fee or penalty for delayed payment of consideration for any supplier. So if there has been any interest, so this we have already discussed somewhere in the time of supply provision with an example, so it's the same thing. And subsidies. So basically any subsidy other than that extended by the central government and the state government. So if any subsidy is extended by the central government and state government, then that will not be included. Otherwise, if there is any subsidy, then that has to be certainly included in the value. Next, discounts. What happens to discounts? And there may be multiple scenarios in case of discounts. So we have prepared a comprehensive chart for you, a ready reckoner chart for you. Now the discounts, first of all, first kind of discount which is known at the time of supply, that is, this pen usually is sold for 2,000 rupees, but there is a 200 rupees discount, 10% discount. So it is known at the time of supply. Shown in the invoice, that is in the invoice 2,000 rupees has been written as the MRP, less 10% discount 200 rupees, net taxable value 1,800 rupees. Will this discount be allowed? Yes. This discount to be excluded from the value of supply and hence tax to be payable on the balance value of 1,800 rupees. Second is discount given before the supply. Before the supply meaning, I approach this shopkeeper and I tell him, boss, this Diwali is around the corner and I have 10 people that I want to give gifts to and I want to gift this pen to all of them. What is the discount if I buy 10 pens from you? And he says, okay, otherwise the value is 2,000 rupees, but I will give you, suppose, 20% discount since you are buying in bulk from me. So this is what we have pre-agreed prior to the supply. And I say, okay, wonderful, you're giving me 20% discount, let's go ahead. So he says, he raises his invoice, 2,000 into 10, 20,000 rupees is the MRP, 20% discount, that is 4,000 rupees. Net taxable value 16,000 rupees. So shown in the invoice, yes, discount to be allowed, excluded. However, in both these cases, if the discount is not shown in the invoice for whatever reasons, then no such discount shall be available. Then the tax will have to be paid on the full value. So very important that the discount, whatever is extended, is given, is reflected properly on the invoice. Discount given after the supply, that is, once the supply has already been made. So, in terms of an agreement that existed at the time of supply. So, basically, all these FMCG companies, Hindustan Unilever, Pepsi, Coke, they have an arrangement with their dealer that if you achieve 10 crore worth of sales in a year, I'll give you 10% additional discount. That's a target-based incentive. Now, for financial year 2021, if 10 crore is the target for a dealer, will he know it from day one? Never. He will take some time, of course, somewhere towards the end of the year, maybe in December 2020 or January 2021, he will be able to meet the target. And once he meets the target, then he will claim from the company that you had said that you will give me 10% additional incentive if I achieve this target. See, I have achieved the target, now give me the incentive. But the question is that on this supplies which would have been made from April 2020 to January 2021, that GST would have been charged and paid on the entire value. And now how to claim the adjustment of that GST? So this is a regular business feature. The government has thought about it. And the option that the government has given is, if any discount is given after the supply, then the condition is there should be a pre-existing agreement. That is, this arrangement that if you achieve 10 crore rupees of target, additional 10% discount will be given. There should be an agreement to it, pre-existing agreement, right before the first supply. Agreement can be oral, agreement can be written, over the mail, a proper contract. It is suggestible to have a written proper agreement. Plus, this agreement should be linked to invoices. How do you link to an invoice? So basically, linking factor that there should be a reference for that agreement, or you should be able to link that, see, I am the dealer, my name is appearing in the agreement, and this was, suppose Pepsi said that if you sell 10 crores worth of Pepsi, so all invoices are for Pepsi only and not for Fanta, Mirinda or anything else. Plus proportionate ITC reversed by recipient. So when I'm saying that 10 crore worth of target is achieved, which means that on 10 crores GST has already been paid to the government, right? And now if 10% incentive is being given, that means that 1 crore worth of incentive is now being passed on, or discount, post-supply discount is being passed on. So for this 1 crores, ideally, first of all, Pepsi would want to reduce the liability to that extent. And for reducing, what they need to do, they need to raise a credit note. And on the other hand, the dealer needs to proportionately reverse the input tax credit on that. And when both of these go hand in hand, then even post-supply discount will be allowed under GST. Please note that for post-supply discount, these conditions are cumulative, that is one over the other. All these conditions have to be satisfied. Even if one condition is not satisfied, then such discount shall not be allowed. Now there are some clarifications like discounts offered by the supplier to customers, and someone had a query also based on this only. So In this, volume discounts is basically the same thing that shall be excluded to determine the value of supply, provided they satisfy the parameters laid down in section 15.3. So buy more and save more is essentially the same thing, that is post-supply discount, that if you buy more, you will get additional incentive. So that is more or less the same thing, and the clarification is that if the conditions prescribed in section 15 subsection 3 are satisfied, then most certainly this shall be allowed. Secondary discount shall not be excluded while determining value, as such discount are not known at the time of supply. So what are they talking about here? Suppose Schiffer has been selling this pen for 2,000 rupees to all its dealers. And at the end of financial year 2021, they hire a cost accountant, and the cost accountant does a costing of their product, and he says, boss, this costing of your product plus profit margin only brings the value to 1800 rupees. You have been overvaluing your product. So your profit margins and everything remains the same, but you can comfortably sell this for 1800. Why have you been selling it at 2000? And the company realizes its mistake and thereafter extends a discount of 200 rupees to everyone, that we have overcharged for our product and we wish to extend some discount to you. In such case, since the conditions specified in section 15 subsection 3, that is there should be a pre-existing agreement, is not met, and hence no GST adjustment for such kind of discounts shall be allowed. Clear? Now, a flowchart, how to arrive at the transaction value under GST. So it says, whether price is the sole consideration for the supply? Yes. Then you can move on to the next step. Whether supply and the recipient are related? No. Then you can move on to the next step. Whether the supply is notified under section 15 subsection 5, what is this? This we'll just discuss. Again, if it is no, then the value of supply, whatever is the value which has been shown, will be considered as the transaction value under section 15 subsection 1. If for any of these the conditions as prescribed are not met, then we will have to go to the valuation rules. Thankfully, right now we are not concerned with that because that is a part of your final curriculum. Now in this regard, I have a question for all of you, and this all of you need to attend right now because you were in the morning, you were suggesting that some case study, some practical questions. So here is a practical question for you. Read it, think over it, and then answer it. I'm giving you around 5 minutes, 4 to 5 minutes to carefully read this, and I need a final answer from all of you. And then we will discuss what is the correct way to address this question, to approach this question, and how to answer your questions in the examination. So over to all of you. Please read this question, come to an answer. I'll read out the question for all of you. ABC Private Limited has provided the following particulars relating to goods sold by it to XYZ Private Limited. List price of the goods, exclusive of taxes and discounts, is 50,000 rupees. Tax levied by municipal authority on the sale of such goods is 5,000 rupees. CGST and SGST chargeable on the goods is 10,440 rupees. Packing charges not included in the price above are 1,000 rupees. ABC Private Limited received INR 2,000 as a subsidy from a NGO on sale of such goods, the price of INR 50,000 of the goods is after considering such subsidy. ABC Private Limited offers 2% discount on the list price of the goods which is recorded in the invoice for the goods. Determine the value of taxable supply made by ABC Private Limited. So we have to determine the transaction value on which GST should be charged in the present transaction. Okay, one more minute. Okay. First, let me see. I'm pausing the share of this PPT, so don't worry. I first want to see what are the answers which have come up. Some of you, there are all sorts of answers. My goodness. 57, 56, 53, 65, 440, 51, 56, 840. कोई ऑप्शन नहीं छोड़ा आप लोगों ने. 58960. Some are even, धमकी भी दे रहे हैं लोग. बताइए मेरा आंसर सही है या नहीं. भाई धमकाओ मत भाई, ऐसे डराओ मत आप लोग. तो अब आप लोगों ने क्योंकि इतने सारे ऑप्शंस दे दिए हैं, तो आइए केबीसी को आगे बढ़ाते हैं. लेट अस सी विद n नंबर ऑफ ऑप्शंस व्हाट इज द करेक्ट आंसर. चलिए पहले करेक्ट को छोड़ दीजिए, गलत को, सोल्यूशन को. यहीं से आप पहले, सबसे पहले जो इतने सारे आंसर्स आपने दिए हैं एंड नंबर ऑफ देम आर रॉन्ग. सबसे पहले लेट अस बिगिन विद द फर्स्ट थिंग. द लिस्ट प्राइस ऑफ गुड्स एक्सक्लूसिव ऑफ टैक्सेस एंड डिस्काउंट्स इज हाउ मच? 50,000 rupees. Second of all, tax levied by municipal authority on sale of such goods is 5,000. Will this 5,000 be included or not? What did we study in the section? It says any other taxes, cesses, duties will be included for the purposes of valuation under GST. So 5,000 has to be added. This means that this becomes 55,000. CGST and SGST chargeable on the goods. Will this be included? No, this will not be included. Why? Because specifically the section says that any tax under GST, that is CGST, SGST, IGST, UTGST and cess, not to be included. Next is packing charges. Will packing charges be included? Yes, because these are incidental expenses. So the value will be 55 plus 1, 56,000. Next it says ABC Private Limited received 2,000 as subsidy from an NGO. What did we study about the subsidy? If subsidy is received from central government or state government, then it will not be included. Any other subsidy has to be considered. So this 2,000 has to be added. So 55,000 plus 1,057 plus 2,000, 59,000. Then it says ABC Private Limited offers 2% discount on list price. What is the list price? 50,000. What is 2% of 50,000? 1,000, which is recorded in the invoice. So discount known at the time of supply. So this 1,000 has to be deducted from 59,000, from 58,000, and then the answer will be 57,000. So list price is 50,000 plus tax levied by municipal authority 55,000 plus packing charges 56,000 plus subsidy 58,000 minus the discount 1,000. The answer is 57,000, and all the other answers which you have given, please introspect, please analyze what went wrong. Why have you given all sorts of answers? The question was very simple, very clear, very clear in all aspects, and I believe this is one of the simplest forms of questions which you could have done. And right now we have discussed it all in front of you, and you have given so many answers. This is really concerning. Second aspect. In the morning, Vice Chairman sir told you about that there is a stepwise marking. Now, stepwise marking which is there in the institute. First of all, let me tell you, the examination that you are appearing for is a professional examination. This is not a maths question. This is not your 12th examination. This is not CPT. The idea is not to give the 57,000. ये बैलेंस शीट मैच नहीं करनी है कि 57,000 आ गया और वो करेक्ट हो गया, नहीं. The idea is to present the entire solution in a manner that you give reasoning. See, it says tax levied by municipal authority be includable as per this. CGST and SGST not includable. Packing charges includable. Subsidy received from a non-government body. Since subsidy is received from a non-government body, the same is included. Total less discount. Since discount is known at the time of supply, it is deductible. So you have to draw a table in your answer sheet. Draw a table like this. Mention particulars. In particulars, give your reasoning. Line by line, write all the details. And then do plus minus addition subtraction. This is the way your answer should look like in examination. Here I understand I had asked for the final answer, but in exam, for any practical question, income tax, indirect tax, or whatever practical queries you are doing, accounts and everything, you should answer in this manner. Because if I am an examiner, I want to understand your thought process, how you are approaching it. Let me tell you, some may have given 57,000, but their reasoning would be wrong. They would score less. Someone with a wrong answer, but correct reasoning, one thing he missed out, he may score more. So this is a forum where the examiner and the institute wants to understand how in-depth understanding do you have of the subject. And that is why it is very important that you give your answers in this form. One more thing. The examiners who are checking your answer sheets, they are given a suggested answer booklet from the institute. And the suggested answer booklet prints all the solutions in this manner. And whenever you are examining something, you want to match it that how closely it resembles what is given in the suggested answers. Another thing, here you will see they have mentioned section 15 subsection 2 clause A, section 15 subsection 2 clause B, and so on and so forth. If you can remember the correct section with clause, if you are gifted, if you can work that hard, nothing like it. Nothing like it. But let me tell you, maximum of us, including myself, cannot remember the exact section, subsection and clause. And that does not matter. That does not matter. That does not matter. What matters is your reasoning. You could have simply said, if you don't remember 15 to in, does not matter. Tax levied by a municipal authority on sales of such goods, includable as taxes other than CGST, SGST, IGST and cess, are to be included for determining valuation under GST. That would be sufficient. No need to mention the precise section. Second thing, never try to play with the examiner. If you do not remember the exact section, never commit the suicide of mentioning the wrong section. Unless you are very sure, never commit this mistake of mentioning the wrong section. I'm again repeating, if you can remember, nothing like it, but if you don't remember, never commit the mistake of mentioning the wrong section. Don't try to play over smart. What you know, detail it out. Let the examiner get a grasp of your mind, and that is the correct way to approach it. I believe we've discussed this enough, and with this we conclude our discussion pertaining to valuation. And now we will move on to the discussion of our next chapter, that is input tax credit, which is a very wide chapter, too much to be discussed. And before moving on to the input tax credit chapter, 5 minutes, I will quickly take up the queries, if any, pertaining to the valuation. Now, if any one of you says, why my answer was not correct, this, that, I have given you the solution, I have given you the answer, this PPT will be circulated. You need to self-introspect, because we cannot do one by one for everyone, because we do not have that luxury of time. I am pausing the PPT, so don't worry about the PPT, because now I am going to look at the queries. So Nikita is saying subsidy is already included, so why we again add it? So subsidy is not included. It says subsidy was provided, and I believe the query, let me just see what question you are raising regarding the subsidy. So it says ABC Limited received INR 2000 as a subsidy from an NGO on sale of such goods. The price of INR 50,000 of the goods is after considering such subsidy. So my dear friends, subsidy is a benefit, and when you are considering the subsidy, so you will reduce your value, na? Because subsidy is a benefit which has been given to you. Why will you add that value? So clearly it is mentioned that the price is after considering the subsidy, which means that otherwise the value would have been 52,000. But because he has received 2,000 rupees as subsidy, that is why this value is 50,000. So Dixon is asking, which tax is levied by municipality on sale? My dear friend, municipality levies tax which is in the sense of local levies, in the sense municipal tax. And municipal tax per se is not included in GST, okay? Raj, not clear what you mean to say when you say goods were supplied? Pranav, yes. Pranav is asking, can we mention section and subsection without mentioning clause? To the extent you correctly remember, only go to that extent. And you mentioning section, subsection is absolutely fine without the clause. Sai Charan is asking, can I please know the meaning of composite supplies? Please, Sai, last session I cannot afford to repeat. I believe the lectures are recorded. Please go and revisit that. Niharika is asking, is only section number enough? Or even subsection has to be written? So I am telling you, till the what point you can correctly remember, mention that section is fine, subsection is fine. Whatever you remember, only till that is fine. Okay. Moli Tiwari is asking, if interest on delayed payment is waived off, will the notional interest be added to value of goods? So, My dear friend, this interest and everything is on actual receipt basis. Okay. So if it is waived off, it will not be considered. Kajal is saying PPT is not available for download. I will share the PPT, Kajal, and they will be uploaded maybe in a day or two. So please wait. The PPTs will be available. Okay. Nirmal is saying, please explain pure agent. But why do you want to understand pure agent? Is it? I believe it's not a part of your course right now, unless until you're already preparing for finals. Okay, so a lot of you are raising a question on your understanding of the question. That some of you are saying that subsidy we are not clear. Subsidy you had seen you're already considered. So why you have added subsidy? Okay, so this is one I can genuinely see that this is something which has caused the confusion. And for such cases, my dear friends, my suggestion to you is, if there is some point which is making you think twice, okay, and where you see it is possible that it could have gone this way or that way, clearly write that I am presuming that this is the treatment that has been to be done, and accordingly I am giving this solution. Like in this case, if you had written that I had presumed that subsidy has been given this treatment and hence I am not adding it again. First of all, that gives a clear picture to the examiner that what is the impression that occurred in your mind. Secondly, in such cases, for your safeguard, some of you may agree, some of you may not agree. But as a well-wisher, try and give both the solutions. So bring this presumption part to the last. Give presuming this is already included, answer is this. Presuming it is not already included, answer is this. It will give an impression to the examiner that you are absolutely clear on your fundamental. And rather, you have the patience to overcome these physical obstacles wherein there could be a dual interpretation. To the extent I'm telling you, if I'm the examiner and I see an answer sheet where a student writes a presumption, gives both the answer, he has already won for me. So, but it's completely my personal opinion. You have absolute right. This is not what the institute would prescribe. This is absolutely my personal opinion. PPTs, please don't worry. I'll share it right away. I'll request the team to upload it as soon as possible. Okay, so for subsidy, please rest your case right now. No more discussion on subsidy. I've given you the solution for confusion on subsidy. The solution given was clearly on the understanding that price is after considering subsidy, meaning the value is there. If there is a difference of opinion and from many of you, then I've told you that you need to write it on presumption basis. Okay. Alright. So I believe we've addressed quite a lot of queries and people are still typing about subsidy. Now, Prasad Pradeep is asking, subsidy from government is to be reduced or to be ignored. So first of all, the provision is very clear. If subsidy is from anyone other than the central government or the state government, that has to be added to the value so as to determine the transaction value. Now, the confusion here is, the question says that the price of 50,000 is after considering the subsidy. So now some of the people are of the view that this 2,000 was already added and it was not required to add again. So I am saying, while the question in itself is clear, but since many of you are raising this point, so you need to write for such cases what presumption you are taking. Okay? Buddy Shailesh is asking, again you are referring a question which is for the last session. Yashika is saying, where would these PPTs be uploaded? This you need to check with the technical team. This is not my domain, okay? I'm here as a faculty, so I can only share the PPTs and the rest you may follow up with the technical team. So I'm moving back to my original discussion. So moving ahead on to the another important chapter, that is input tax credit. Input tax credit, my dear friend, is the soul of GST. आत्मा है GST. अगर ये इनपुट टैक्स क्रेडिट का इशू नहीं होता, आप आज भी सेंट्रल एक्साइज, वैट, सर्विस टैक्स पढ़ रहे होते जो हमने पढ़ा था अपने टाइम. इनफैक्ट ऑल ऑफ यू आर वेरी लकी that you are not required to study n number of different taxes. Imagine the plight. आज आप लोगों को बुरा लगता होगा that such a vast course and only for 40 marks. And I agree, for 100 marks, both income tax and indirect tax, it's quite a bit. But आप हमारे बारे में सोचो. We had to study for indirect tax, within indirect tax, service tax, central excise, concepts of VAT, customs. तो 4 लॉ पढ़ के जाते थे हम लोग पेपर देने. तो I believe you would have already heard a lot about it from your parents also कि हम इतनी मेहनत करके जाते थे, but still we have all the right to share our pain. Nonetheless, so it's quite, we've come very far, and the entire idea behind implementation of GST was कि जो tax purchases पे देते थे वो आगे set off करने के लिए available नहीं होता था. It was not available for set off, which meant that there was a tax on tax scenario. कैसे? I am a chartered accountant. In my office, I buy a laptop, I buy an AC, I buy a printer. So prior to GST, on goods, central excise and sales tax was applicable. Whereas I, as a chartered accountant, all the services that I provided were liable to service tax. Now, no credit of sales tax was available under service tax and vice versa. तो मैं जो लैपटॉप खरीद के लाया, एसी खरीद के लाया, उसका क्रेडिट मुझे नहीं मिलता था. और मैं जो सर्विसेज आगे टैक्स पेयर्स को देता था, who were dealing in goods, they could not avail any credit of the tax paid on services received from me. So it was a very huge challenge. And that is why GST was necessary, so as to first of all bring central government and state government on level so that they can concurrently levy the tax on the same transaction. Both get the power to levy tax on goods as well as services. So earlier services was exclusively taxed by the central government and goods were taxed by everyone, central government, state government, local government, जिसको मौका लगता था सब टैक्स लगाते थे. Second, today there is no difference if there is a service provider or a supplier of goods or a trader or a manufacturer. Every person is charging one tax, GST. Which means that today if I buy a laptop, today I buy a mobile, today I buy an AC, today I buy a printer, the tax that I pay is GST. I can avail the credit, and on my supplies, the services that I am supplying, again the tax that I have to charge is GST. So I can set off the tax paid on purchases against my output tax liability. So the primary section which deals with input tax credit is section 16. What does this section provide? It says every registered person. So basically, first of all, what we need to understand is input tax credit is only available to a registered person. A non-registered person cannot avail any ITC and be entitled to take credit of input tax charged. What does this mean? This means I buy a laptop and the supplier charges tax at the rate of 28%. Whereas actually the tax leviable on laptop was only 18%. The law says does not matter what was the actual rate of tax. Whatever tax has been charged will be available as credit. So the credit available to me would be for the entire 28,000. So 28%. On any supply of goods or services or both. So it could be either goods, either services, which are used or intended to be used in the course or furtherance of business. So I buy a laptop and I give it to my nephew, give it to my niece, no credit will be available. I have to buy the laptop and I have to use it in the course or furtherance of business. Second of all, the meaning of this used or intended to be used, what does this mean? This means, suppose someone is setting a factory. He invests 100 crore rupees. On this 100 crore rupees, he pays 28% as tax, which means he has 28 crores of GST credit available with him. And in the first month itself, he is able to make a sales from that capital investment. He is able to make the sales of 1,000 crore rupees, on which the tax liability is for suppose 28 crore rupees. Then he can entirely use that input tax credit, meaning thereby that one-to-one matching or utilization over the life period, there is no such restriction. The moment you buy any product, be it capital goods, be it inputs, be it input services, anything, immediately you can use and utilize the entire amount of the input tax, entire amount of such input tax credit. Some more conditions for availment of input tax credit are: there has to be a valid tax paying document. That is, any input tax credit can only be availed basis a valid tax invoice or a debit note or a bill of entry or a sales tax invoice. If there is no valid tax paying document, then no input tax credit can be availed. Second, goods and or services should have been received. So in time of supply, my dear friend, we discussed that in case of services, the liability, suppose I am providing 10 lakh worth of services to Hindustan Unilever and they pay 1 lakh rupees to me as advance. Immediately I have to pay tax on that advance because time of supply says advance in case of services, you are liable to pay tax. Now this tax that I paid on the advance, can HUL avail the credit? No. HUL cannot avail the credit because I have not yet provided, the services have not yet been received by HUL. So the goods and the services should have been received. Here there is an exception that ITC available to registered person, that is in case of bill to ship to model. So bill to ship to is basically where I am selling goods to a person based in Rajasthan and he will further sell the goods to person based in Haryana. So he says, I will raise the invoice in the name of the Rajasthan person, that is billed to Rajasthan person, and ship the goods directly to the Haryana person from Delhi. So that is bill to ship to, so that is an exception. And now this bill to ship to has also been recognized in case of services. So in services, what happens is, suppose I am a GST specialist, someone from Chennai, practicing in Chennai, has a client in Delhi who wants some specialized GST services. They approach me and they tell me that please provide these services to this person and you raise the bill to us, whereas you provide the services directly to our client. So for such cases, bill to ship to in case of services has also been recognized. Next is tax charged has actually been paid. So this is where the government is saying that this we will cover in detail in the returns. That is, it should appear in your GSTR 2A. Plus, the return under section 39 has been furnished. So basically, any availment of input tax credit can only happen once you file your GSTR 3B return under GST. And in case of goods received in lots, ITC shall be allowed upon receipt of the last lot. So basically, suppose Maruti is clearing 100 WagonR cars to its dealers. Now 100 WagonR cars cannot move in a single container. So there will be 10 different containers, right? So 10 different containers meaning that the credit will be available on the receipt of the last container as and when it is received by the dealer. Okay, so here friends, we'll take a quick break for 5 minutes and then we'll reconvene our class, continuing the rest of the session. So, this friends we've discussed. Next condition is what used to happen was earlier, prior to implementation of GST, that suppose there is an entity in Delhi and they have 10 crore rupees of surplus of input tax credit, and there is an entity in Kolkata who has a liability of 10 crore rupees under GST. So somehow they used to get connected and fake supplies were shown from Delhi to Kolkata for the purposes of payment of this output tax liability. And this credit was transitioned from the Delhi entity to the Kolkata entity. So as to plug these kind of fake transactions, government introduced a rule that against any supply for which you are claiming input tax credit, the payment should have been made within 180 days from the date of invoice. If for any reason the payment is not made within 180 days, then in such cases, the credit will need to be reversed. Not only this, there will be a liability to pay the applicable interest right from the date of availment of this input tax credit. However, if after 180 days, say suppose after 200 days, 250 days, 300 days or 1 year, 2 years, this payment is finally made, then the law allows that as and when such payment is made, the credit can be re-availed by the entity. So this is another condition. Next, no input tax credit shall be available where tax has been made and demand has been confirmed on account of any fraud, willful misstatement or suppression of funds. So basically the law is very clear that if you're making payment, if you're availing an input tax credit, so where any demand has been confirmed on account of fraud, willful misstatement or suppression of tax, then in such cases no input tax credit whatsoever shall be available, because these are clearly the case of tax evasion. Now a recent change, which is recent from your examination perspective. So you would recall in this PPT, here we had discussed that tax charged in has actually been paid. So this is in supplement, this condition is supplementing that provision. When GST was introduced, the idea of the government was, and it was a wonderful idea, government said that every taxpayer will file 3 returns. What are those three returns? First, he will file GSTR1, that is the details of his outward supplies. From that GSTR1, it will become GSTR2A, that is wherever A is added, that becomes automatic. From GSTR1, GSTR2A automatically will be populated, and 2A refers to the recipient, that it will reflect that in your name such and such supplies have been reported by C. Shashank Gupta. The recipient will then undertake some rectifications if necessary, and finally submit his GSTR2. Basis his rectifications, I will then receive GSTR1A, that is my one with necessary rectifications from the recipients. And finally, I will submit GSTR3. So basically, the structure was in such a manner that my sales get checked with the recipient correspondingly with the purchaser, and the purchaser correspondingly cross-checks my sale. Wonderful mechanism. In fact, too good to be true. because there was such a huge requirement of infrastructure till today, into 2020, 2017, almost 3 years since implementation of GST. Till today, that has not come into existence. We are working on a backup mechanism, that is GSTR 3B, a simple monthly summary return. GSTR 1 is there, and basis this GSTR 1, GSTR 2A is automatically populated, but no GSTR 2 is filed, no GSTR 3 is filed till date. Now, because this backup mechanism was working, the government had to allow every person input tax credit basis his own self-assessment. So basically, and some of you who would be pursuing articleship, or some of you who are getting some practical exposure would know that in your GSTR 3B, you could simply self-avail any amount as you want to avail as input tax credit. The government now had to put some restriction, because though there were bona fide cases, but there were some fraud cases also. Hence, the government introduced an upper limit. Upper limit meaning, government said that whatever credit is appearing in your GSTR 2A, you can only avail 120% of that maximum, not beyond that. So earlier what was happening is that suppose in 2A only 10 lakh rupees of credit was appearing, but the person was could avail 1 crore as credit, 10 crores as credit, basis his own self-assessment. But now the government has placed a restriction that if 100 rupees is appearing in 2A, then the maximum amount of input tax credit that you can avail is 120 rupees. And this was a recent introduction, by notification number 49/2019, dated 9th of October 2019. Now we move on to section 17, that is apportionment of credit and blocked credits. With respect to apportionment of credit and blocked credits, the law says that where the goods and or services, that is purchases, are used partly for business and partly for non-business purpose, then credit will be available only to the extent they are used for business purpose. Moreover, if purchases are used partly for making taxable supply, including zero-rated supply, and partly for exempt supply, ITC will be available only for making taxable supply, including zero-rated supply. Now, how would this apportionment happen? So, apportionment has been given in detail. Apportionment has been given in detail by Rule 42. And Rule 42, if you go on to read, may appear very complicated to you, because it talks about T, T1, T2, T3, C1, C2, T4. And when do we need to go to Rule 42? First of all, we need to understand, if for any business, the bifurcation is so simple that he makes 100 purchases of goods and services, 50 are used for business, 50 are used for non-business, then credit will be availed on entire 50, and the rest 50 used for non-business, entirely no credit to be available. From this 50, 25 are used for making taxable supply, 25 are used for making exempt supply, credit only to be availed on 25, and the rest of the 25 to be foregone. But usually, the scenario is not that simple. And what happens practically is, in businesses, it is very common to have some common expenses like your audit fee, marketing expense, legal expense, which are commonly booked at the corporate office. And this is common for the entire entity, which would include taxable as well as exempt. And that is why, where there is this common credit, which is relevant for taxable as well as exempt, there this rule 42 needs to be applied, and this rule 42 only talks about inputs and input services. In this rule 42, from the total credit, we first need to identify that portion which is exclusively for non-business purpose, and that will be termed as T1. This amount entirely has to be foregone. Then, exclusively used for exempt supply, this amount has to be foregone. Then, credit blocked under section 17 subsection 5, this we will discuss, but blocked credit again has to be foregone. And the balance amount, after excluding these three, has to be credited to the electronic credit ledger. From this amount credited, we have to identify what amount of credit is exclusive to taxable supply. And that amount entirely will be available. And the balance amount will be the amount which is common credit both for taxable as well as exempt. And this amount, simply what we need to do is, we need to attribute it in the ratio of exempted turnover over total turnover, exempted turnover over total turnover, exempted turnover over total turnover. And this has to be a monthly exercise. So when we are distributing it in the ratio of exempt turnover over total turnover, suppose 10 lakh rupees is the common credit, 1 lakh rupees is the exempt turnover, 10 lakh rupees is the total turnover. This would mean 10 into 1 by 10, 1 lakh rupee will come out as credit attributable to exempt supply, and this 1 lakh needs to be foregone. For determining the percentage attributable to non-business purpose, law has given a simple formula. Calculate 5% of common credit. So, for our case, suppose the common credit was 10 lakh rupees, so 5% of 10 lakh will be 50,000. So simply this 50,000 needs to be done away with, and the balance can be available. So first we need to multiply this common credit in exempt turnover by total turnover. That amount needs to be done away because that is credit attributable to exempt supply. Next, multiply this common credit by 5%. That will be the amount attributable to non-business purpose. And the balance amount, that is the common credit 10 lakh minus 1 lakh, that is credit attributable to exempt supply, and 50,000 credit attributable to non-business purpose. 8,50,000 is the eligible ITC. And the total eligible ITC will be this 8,50,000 plus the credit exclusively attributable to taxable supply. So T1, T2, T3, D1, D2, C2, C3, this is all very complicated. But if you structurally look at the format, it is actually very simple. This exercise has to be done every month. This has to be done separately for IGST, separately for CGST, separately for SGST. And month on month basis, we need to do this. And thereafter, post the close of financial year, suppose for 2021, between April 21 and September 21, a final calculation has to be done for the entire year. And basis that calculation, if excess amount has been reversed, then that amount can be reavailed. If under reversal has been done, then the excess amount needs to be reversed along with the applicable interest. Now, apportionment of common credit on, okay, so before we come on to here, I hope everybody is clear on what is taxable supply and why it includes zero rated supply. Zero rated supply has been defined under GST to include supply to SEZ unit, SEZ developer plus exports out of India. So zero rated supply is basically something which is more or less in the nature of export, and in the case of export, the government gives the benefit of input tax credit completely while giving you refund or exemption from payment of tax on your outward supply. Similarly, as we discussed Rule 42, this was specific to inputs and input services. Similarly, Rule 43 talks about apportionment of credit in case of capital goods. In case of capital goods, again, we need to first find out input tax on capital goods used exclusively for non-business and exempt, and this amount will not at all be considered, will not at all be credited to the electronic credit ledger in the first place. Second of all, we need to determine input tax on capital goods used exclusively for taxable supplies, including zero rated supplies, and this will be entirely credited to the electronic credit ledger because there is no need for apportionment. And the balance amount, that is capital goods neither covered under A nor covered under B, the useful life of such capital goods will be considered 5 years from the date of invoice, and this amount will first be credited to the electronic credit ledger. Thereafter, this will be termed as common credit on capital goods, that is, that credit on capital goods which are being used for taxable as well as exempt. Now, here there could be some more cases, and this is slightly a technical aspect, so please be with me, don't ask me to repeat, okay? I'll take this slowly so that it is clear to every one of you. If capital goods are covered under A and they subsequently get covered under, so they were earlier covered here, that is, they were exclusively being used for non-business or exempt supply, but now they have moved from being exclusively used for exempt or non-business, now they have moved to common bracket. So earlier I may be using a machinery to manufacture a product which was exempt, but now it has become taxable. So a part of it is being used for manufacturing taxable, a part of it is being used to manufacture exempt. In such cases, law says, okay, so you need to first derive the present value of the credit on such capital goods. And how do we do that? We need to first take out what was the total credit on such capital goods minus 5% of input tax credit for a quarter or part thereof. So suppose this machinery was used here for 2 years from the date of purchase, and now it is being brought here. This means that here 2 years means 8 quarters, and 8 quarters means 40% of the input tax credit needs to be subtracted from the total credit, and the balance needs to be added here. Similarly, if capital goods were earlier covered under B, that is, they were exclusively being used for taxable supplies, but now they are moving to this category, that is being used for taxable as well as exempt. In such case, same treatment, that is from the date of purchase minus 5% of input tax credit for every quarter. That is, here again, suppose they were used here for 2 years. Now they are being moved here. So 2 years means 8 quarters. 8 quarters means 40% of the credit has to be subtracted, and the balance 60% value has to be covered here. So this is how we will first arrive at TC. Then this TC is actually the total credit of capital goods, and we need to bring it to a particular month, because in capital goods also you need to do a month-wise calculation. And for doing the month-wise calculation, you have to divide the total credit by 60 because the useful life is deemed as 5 years and 5 years means 60 months. So you have to divide the total credit by 60 and then you will come at the monthly credit. This monthly credit then needs to be multiplied by in the ratio of exempt turnover by total turnover. And the value that comes needs to be added to the output tax. So basically, the law says that first identify what is exclusively non-taxable or non-business or exempt, then what is exclusively taxable, then what is common. From the common, bring it to monthly. From monthly, then multiply it in the proportion of exempt by total turnover, and that is the value which needs to be written off in case of common usage of capital goods. So technically reading it looks difficult, but if you understand the essence, it is comparatively very similar. Some special provisions have been given for banking companies and NBFC. So if they want, they can choose this mechanism, that is this elaborate calculation, or simply they avail 50% of eligible ITC. That is, if 100 rupees is the total ITC, they avail 50 rupees and they write off the balance 50 rupees. But this restriction of 50% shall not be applicable on supplies made by distinct persons. So basically, HDFC Delhi, if HDFC is availing this 50% option, then full credit will be available for supplies between HDFC Delhi and HDFC Mumbai and HDFC Kolkata and HDFC Bangalore. And this option has to be exercised for one financial year. Once you've availed one option, whichever you choose, but once you've availed it, then the bank needs to stick with it. Now, we move on to the credits restricted under section 17 subsection 5. The first credit which has been restricted, and there is a small, so this has been a constant point of discussion and there has been some small change here also. Motor vehicle having seating capacity of up to 13%. So first let us draw a distinction. Motor vehicle for transportation of goods, no restriction, entire credit available. Motor vehicle for transportation of passengers having seating capacity of more than 13 persons, that is 14 persons and above, entire ITC available. Where is the restriction? First, it has to be motor vehicle for transportation of passengers, plus the seating capacity should be up to 13 persons including the driver. And the aircraft and vessel. So, aircraft when purchased by Reliance, Ambani, Adani, Tata, no credit available. Vessel means yacht purchased by Ambani, Adani, Tata, no credit available. Rolls-Royce, all the fancy cars, Lamborghini or Bentley, anything purchased, no credit whatsoever available. But if Bentley is purchased by Big Boys Toys, if Bentley is purchased by a motor dealer, if aircraft is purchased by Boeing, if yacht is purchased by a yacht dealer, so basically someone who will further sell these goods, then of course since he is doing business in this, the credit will be available. If the motor vehicle has been purchased, a jeep has been purchased and that jeep is used for transportation of passengers, so and he charges a fee ticket from everyone, so basically taxable transportation of passengers, Ola, Uber, and aircraft and vessel has been used. So vessel, somewhere you see ferries which are used to transport passengers. When you go to South India, Kanyakumari, ferries are used to take you to this Vivekanand Ji's place and other places also in India. Aircraft, helicopters being used to take you to Badrinath, Kedarnath shrines. Taxable transportation of passengers. Business कर रहा है उससे, credit मिलेगा. Taxable training for driving, flying, navigating. एयरप्लेन पे उड़ना सिखाते हैं सर, फीस लेते हैं, टैक्स देते हैं. वेसल शिप चलाना सिखाते हैं, पैसे लेते हैं, टैक्स देते हैं. गाड़ी चलाना सिखाते हैं, फीस लेते हैं, टैक्स देते हैं. Again, doing business, credit will be available. While ITC on purchase of the above has been restricted, now see the minds. So, Mr. Ambani was reading this provision, he said, अच्छा मेरी रोल्स रॉयस पे क्रेडिट नहीं देंगे, मेरी कलिनन पे क्रेडिट नहीं देंगे, बट व्हाट अबाउट द सर्विस? मेरी तो रोल्स रॉयस की सर्विस ही 5 लाख रुपए की होती है. माई रोल्स रॉयस गेट सर्विस फॉर ₹5 lakh. ऑन दैट देयर इज अनदर 50,000 rupees of GST. Will that be available as credit? Law says no. Where ITC on purchase is restricted, restriction shall also be applicable on services of general insurance, servicing, repair and maintenance. अगर गाड़ी का क्रेडिट मिलेगा तो उसके इंश्योरेंस का भी मिलेगा, सर्विस का भी मिलेगा, रिपेयर मेंटेनेंस का भी मिलेगा. But if the credit is restricted on the motor vehicle, then no credit on general insurance, no credit on servicing, no credit on repair and maintenance. ITC also restricted on leasing, hiring, renting of such motor vehicle. अंबानी जी ने कहा, I have 200 cars and put together these cars would be worth 100 crores and they are all taxed at 28%, 28 crores of GST I am losing. The law says that will not be available on purchase. Okay, no worries. I will ask some dealer to buy it and then lease it to me. Hire, I will get it on hire. I will take on rent. Then the credit will be available. Law says no tax planning allowed. Not available even in case if you take on lease, rent or hire. So basically, to dal mein paat. So wherever the assessee is moving, the law is also coming behind. Okay, you find out loopholes and we will plug the loophole. Clear? Furthermore restrictions, life insurance, health insurance, no credit. Food and beverage, McDonald's and Domino's. हालो बिल लगा देंगे ऑफिस में, क्रेडिट ले लेंगे, जीएसटी का नहीं मिलेगा. आउटडोर केटरिंग, लैविश वेडिंग करते हैं, लैविश, let us do a lavish program and put the entire expense, avail the GST, not available. Beauty treatment, oh ho, I become a chartered accountant getting a good salary, let me get a plastic surgery and look like a goddamn hero or an actress. No GST credit, you can do that expense but no GST credit. Health service, let me go to a gym, let me get 6-pack abs, but no GST credit will be available. Cosmetic and plastic surgery, beauty treatment was salon and spa, and cosmetic and plastic surgery again here is restricted. Leasing, renting, hiring of motor vehicle, vessels or aircraft, again no credit available. But for this line, except these two. For this line, credit is allowed only if goods or services are used towards making taxable supply of the same category. That is, McDonald's is when it is buying that ketchup from the manufacturer of ketchup, they get this sachets now. When it is buying the bun, when it is buying the fries, when it is buying the frying oil, will McDonald's get the credit? Yes, because it is making the outward supply of same category. But the consumer, because he is not making any outward supply, he will not get the credit. Membership of club, health and fitness center, very important these days, but still no GST credit available. Travel benefits to employees. Now, even if they give, nobody will take. But still, because this law was framed prior to GST, no GST credit shall be available. On this entire set, credit can be available to the employer if any of these services are obligatory for an employer to provide to its employees. For example, health insurance, people working in coal mines. Law says if you are getting people to work in coal mines, you have to obtain their health insurance. So, mandated by law becomes obligatory, hence credit will be allowed. Food and beverage, more than 100 people working in a factory, you need to arrange for the fooding. Hence, credit will be available. Cosmetic and plastic surgery, someone was working in the factory, God forbid there was an injury and there was some burn and that cosmetic plastic surgery was done, it was all rectified. Obligatory on the employer, GST credit available. Membership of club, health and fitness. So wherever it is obligatory, there the credit will be available. Otherwise, it will not be available. Construction of immovable property other than plant and machinery. That is, works contract services when supplied for construction of immovable property except where it is an input service for further supply of works contract service. So basically, when works contract services have been received for, so you become a chartered accountant and you earn good amount of money and you identify a plot of land and you say that I will build the house of my dreams and contractor, whatever money thou shalt demand, I shall pay to you. And you say that I will avail the GST credit and suddenly you recall, no. The law says works contract services when supplied for construction of immovable property, no credit available except right next to your plot there is a builder. He is building 100 flats. He gets the same contractor that, okay, you will build my building also. And he says, okay, I will charge you this amount. The contractor says, I will charge you this amount plus GST. And he smiles and looks at you. I will avail the credit. And you have to say, yes, you can avail the credit because it is an input service for further supply of works contract. Next, goods or services received for construction of immovable property. Now you are a chartered accountant. You start tax planning, you say, works contract, you say that the credit will not be available. Okay. What I will do is, I will buy the cement, steel, tiles, everything separately, and I will procure the construction services separately. Hence, no works contract, separately buying. Now, will the credit be available? Law says, no, sir. Goods or services received for construction of an immovable property on his own account, even when used in the course of furtherance of business. That is, suppose you are building an office, a 3-storied lavish office, and office will be used, of course, for professional purposes. Even then, the law says no credit whatsoever shall be available. Some more restrictions. Goods and services on which tax has been paid under section 10, that is any purchases made from composition dealer. So some were bringing up this query. I hope this makes it clear to you now. Next is goods or services or both received by a non-resident taxable person. So no credit whatsoever is available to a non-resident taxable person. What is a non-resident taxable person? We will discuss in the registration chapter. Do not worry. Only one type of credit is available to a non-resident taxable person. That is in case of goods imported by him. Not domestic purchases, but only on goods imported by him. Next, goods or services or both used for personal consumption. Again, no credit available. Next, goods lost, stolen, destroyed, written off, or disposed of by way of gift or free supplies. So basically any Diwali gifts, Holi gifts, samples, that is free supplies. There was a fire in the factory. There was a burglary in the factory. There was an earthquake and the stock got destroyed. For some reason, the stock became obsolete and you had to write off. So if any of these things happen, then no input tax credit, whatever will be available. If the input tax credit was already availed, then that input tax credit has to be reversed. And any tax paid after detection of fraud or suppression of goods or removed in contravention of GST Act under section 74, 129 and 130, again no credit whatsoever shall be available. Now we move on to the next section, that is section 18. This section 18 talks about some specific scenarios. First, it talks about the case of new registration. That is, a person becomes liable to obtain registration and obtains registration or applies for registration within 30 days of becoming liable. So if he applies for registration within 30 days of becoming liable, then in such case, he shall be entitled to credit of input tax with respect to inputs in stock, semi-finished goods and finished goods as on the date preceding the date when he becomes liable to pay tax. So suppose this person became liable to pay tax from 1st of January. He applied for registration on 25th of January. So he will be eligible to avail credit right from 1st of January because he has applied for registration within 30 days. If a person takes voluntary registration, that is, he is not liable, legally he is not liable, but he is voluntarily taking registration, then in such case, he can also avail credit of inputs in stock, semi-finished or finished goods, but it will be as on the date preceding the date on which registration is granted. If a person ceases to pay tax under section 10, that is, the person was earlier paying tax under composition scheme and now he is moving to the regular tax scheme as a normal taxpayer. In such case, he will be entitled to credit of input tax with respect to inputs held in stock, semi-finished or finished goods and capital goods. And the relevant date is the date preceding on which he becomes liable to pay tax as a normal taxpayer. That is under section 9. In case of goods or services becoming taxable, so earlier the goods or services were exempt, but now they have become taxable. So accordingly, the person would have earlier not been able to avail any credit on inputs and capital goods, but now he can avail the credit and the relevant date will be the date preceding the date from which supply becomes taxable. Credit on capital goods. So here when we are talking about capital goods in both these cases, in these cases the capital goods shall be available after reducing 5% credit per quarter. So basically here suppose 2 years he was under composition scheme, 2 years capital goods were used under composition scheme and now he is moving to normal taxpayer. So 2 years means 8 quarters means 40% he has to subtract and the balance 60% he can avail. And for this a declaration has to be made in GST ITC 01 with all the details. It shall be verified. And if the total credit availed is more than 2 lakhs, then it has to be duly certified by a chartered accountant or a cost management accountant. Similarly, the law says, if there is a change in constitution of registered taxable person on account of sale, merger, demerger, amalgamation, lease or transfer of business or death of sole proprietor, then the entire credit will be transferred to such sold, merged, demerged, amalgamated, leased or transferred business. Here a form has to be filed, that is ITC 02 which will be filed by such the seller and accepted by the recipient. Here, a certificate is required to be from a practicing chartered accountant that the transfer has been done with specific provision for transfer of liabilities. So that if there are any liabilities with the entity which is getting merged, that is carried over by the merged entity, and thereafter such merged entity can be held liable for the payment of such liability. Reversal of credit. So where a person is switching from regular scheme to composition scheme, or earlier he was dealing with taxable supply and now his entire supplies are becoming exempt. In such case, vice versa scenario, in such case, he needs to pay the entire amount of input tax credit, that is equivalent to input tax credit on inputs as well as capital goods. And if the amount available in electronic credit ledger is lower than the amount that is required to be reversed, then the balance has to be paid from the cash ledger. Or if the amount available in the electronic credit ledger is higher than the amount that is required to be reversed, then the entire amount available in the electronic credit ledger shall lapse. And for this, a declaration has to be furnished in form GST ITC 03. Next is supply of capital goods on which ITC already taken. So, where credit has already been availed and now the capital goods are being supplied. So, suppose I have a laptop, I bought a laptop, I've used it for 2 years, now I'm selling this laptop. So, either balance amount of ITC needs to be paid, that is 60% of ITC will need to be paid, or the tax on transaction value, whichever is higher. Because government is a very sharp businessman, the government says at least the balance amount of ITC we will take. But if for some reason you are able to sell it at a higher value, then we will take the higher amount. Then Rule 41A, this was a recent entry. So earlier, while we all know that under GST, we need to obtain separate registration in separate states. If we have presence in multiple states, then in every state we needed to have a separate registration. But there was a restriction. Restriction meaning that within a state, so suppose I have 10 offices in India and 4 offices within Delhi. So 6 offices are outside Delhi and 4 offices are within Delhi. North Delhi, South Delhi, West Delhi, East Delhi. So earlier, the maximum registrations I could obtain were 6 registrations. That is 1 registration for Delhi for all the 4 locations and 5 for other states. Because if within a state, I had to obtain a separate registration on a common PAN, then that was only available if the business line was different. So suppose I have a chartered accountant office on the same PAN number, then I had a manufacturing unit on the same PAN number, then I could operate separate registration for manufacturing, separate registration for my CA practice. But if all the 4 offices were in CA practice, then in Delhi I could only work on single registration. This condition was relaxed. The government allowed, even if you are in the same line of business, you could have separate registrations within a single state. And because it was allowed later, the procedure for this was notified by Rule 41A. And the procedure simply means that if earlier my 4 offices were running on a single GST registration, that would have meant that the entire ITC of all the 4 locations was clubbed under a single registration. And now I will have 4 different registrations. So the ITC needs to be proportionately distributed in all the 4 locations. So the procedure for that was prescribed by Rule 41A, and a new form GST ITC 02A was is required to be filed for that. Then this again is a recent and an important amendment. This amendment talks about the procedure for utilization of ITC. So here I am discussing it theoretically. In the RTP we will do a question on that practically, but here let us first let us revise it very with patience. See, earlier the only restriction in tax credits was that TGST credit cannot be used against SGST and SGST credit cannot be used against CGST. Other than that, there was no restriction. But the difficulty that was arising with the government was that in this IGST, the central government has to do a lot of work. Because IGST means 50% revenue of the central government and 50% revenue of the destination state. Now it was becoming increasingly difficult for the government to identify as to which state does the credit of IGST be repatriated to. So they should give it to which state. So the government came up with an idea, let us introduce a restriction that every taxpayer has to first exhaust his IGST. First exhaust his IGST credit and only then he can utilize his CGST or SGST / UTGST. Which means what? IGST credit, first utilize it for against IGST liability. Suppose I have 10 lakh worth of IGST credit at 10 lakh worth of output IGST liability. In completely set off here, I can move ahead. But if for any reason the IGST credit cannot be completely set off here, then you have to set it off against CGST and SGST. And this you could do in any order of your choice. Usually, the taxpayer, a prudent taxpayer, will plan it in such a manner that his tax payable in cash, if any, comes to bare minimum. That is, for this what we need to do is, we need to look at the entire question and then think whether it will be good to utilize IGST against CGST or against SGST. So that effectively the maximum liability can be paid through credit and the liability payment through cash ledger can be minimized. That is simple prudential approach. Okay. So this government has kept open for the taxpayer to opt in whichever manner he wants. He can pay such tax, utilize the credit of IGST. But before moving on to utilization of CGST, this IGST credit should come down to 0. Or your liability should come down to 0, of course, then why would you go to CGST? So, that is why before plotting a final answer, we may need, depending on the question, we may need to back and work that what is the best mechanism to utilize it. But let us first complete this discussion. So, IGST first against IGST, then again CGST and SGST in any proportion. Once IGST is 0, then we need to move here, and here the next restriction is first utilize your CGST credit, against your output CGST liability. against your output CGST liability. So the first thing is that first utilize your CGST credit against your CGST liability, and the balance, if any, can be utilized for payment of IGST. Of course, no CGST credit can be utilized for payment of SGST liability. Then once CGST is zero, then once CGST is utilized, then we need to move to SGST, and SGST first has to be utilized towards SGST, and the balance, if any, has to be utilized for payment of IGST. But here again another restriction, that SGST will be utilized for payment of IGST only when CGST credit is zero. Okay, so be very careful. It says 1, 2, 3 IGST 0, 4 CGST against CGST, 5 CGST against IGST, 6 SGST against SGST, 7 SGST against IGST, only when CGST credit is 0. So this is the stepwise mechanism. Go back, learn it by heart. इसको घोट के पी जाओ. This is something which is very recent, very important. A good question can be found in it. And of course, you need to remember it from practical purposes also. So, go back, study it in detail, learn it by heart. Next, there is a recent clarification. Free samples and gifts. Then, in case distribution of gifts and free samples falls within the scope of supply as per Schedule 1, that is, if it is becoming taxable under Schedule 1, then since it is becoming taxable under Schedule 1, the credit against such free samples and gifts will be available. If there is a buy one get one offer, ITC shall be available to the supplier. So basically, buy one get one offer, usually earlier what used to happen was that generally soaps were sold 3 plus 1 free. So you used to get 4 soaps at the price of 3. Now, smartly what they've done is, they don't say 1 free, they say 4 soaps at the price of 3. For toothpaste, earlier it was said toothbrush free with toothpaste. Now they say paste plus toothbrush at the price of toothpaste. So that is what the law is saying here. That buy one get one offer is nothing else but 2 things being supplied at the price of 1. And because 2 things are being supplied at the price of 1, that is completely the right of the assessee, the entire input tax credit shall be available. Discounts including buy more save more offers, this we have already discussed. If the conditions of section 15 subsection 3 are complied, then of course the entire credit shall be available and the benefit can be passed on ahead also, provided all the conditions are satisfied. And this, my dear friends, brings me to the conclusion of our discussion for both input tax credit as well as the valuation chapter. We have wonderfully completed our discussion within time. I am now pausing the PPT and I'm now moving ahead to your queries for discussion. Okay. Okay. So let me try and answer. So see, I start speaking in Hindi and southern students from South India immediately come rushing to me with a knife, speak in English, and I speak too much English and students from North India come to me with a knife. कुछ तो हिंदी में भी बोलो. तो आप एक काम करो, दोनों चक्कू मार ही दो मेरे को, क्योंकि अब if I hear one and if I ignore the other, I don't know what to do. Okay, so coming to the queries, Vinod is asking, please can you explain buy one get one offer? Pen pad, so this writing pad, along with this writing pad, you get this pen free. But that would mean that when I say free, it means that section 17 subsection 5 says if you're supplying anything free, no credit will be available. So an ideal way is you say pad plus pen at the price of pad. So two things at the price of one, and because two things are being supplied at the price of one, that is completely allowed. Nothing is being supplied free of cost, and hence the ITC for both the pad as well as the pen shall be available. Neeraj is asking transport of cash by van to ATM. Is ITC can be availed? Wonderful. Yes, my dear friend, transport of cash by van, yes, credit can be availed. You are pointing your mind in the right direction. सीधे cash की बात करो. Next it says, Tabassum Khan is asking, sir, as per rule 43, in case of capital goods, ITC is reversed on the basis of their useful lives. But at the time when capital goods are converted, ITC is availed on the basis of quarter. Why it is not availed on the basis of remaining useful life? Okay, Tabassum, again a wonderful query. But this is an anomaly in the law and this is what legally provided, and hence we need to follow that. So you are right when you point out that anomaly, but we have to comply with the law. Neeraj is asking, why 180 days condition not applicable to supply under RCM? Mere dost Neeraj, my friend, who is liable to pay tax under RCM? The recipient. And if the recipient himself is liable, then why should there be a requirement of payment in 180 days? I hope you got your answer. Mansha is asking, remaining ITC of IGST in any order or in any proportion. It means we have to figure out the proportion. Yes, Mansha, you have to figure out the proportion which is most beneficial to the assessee. Brinda, I will certainly solve one sum on the last topic. Please be with me till tomorrow. I assure you, we will 100% do a question on it. Thank you for all your wonderful comments. Thank you for the appreciation. Charan is asking, ITC on repairs and maintenance of a motor vehicles used for business purpose. Does ITC can be availed? See, Sharan, it depends what is the motor vehicle. If the motor vehicle is for transportation of goods, most certainly the repair and maintenance ITC can be availed. However, if the motor vehicle for a manufacturing, someone manufacturing soaps, and he has a Rolls Royce and he says, I have sent my Rolls Royce on repair and maintenance, since the credit of car is not available, no credit of repair and maintenance will be available. Mayank is asking, sir, when car have 13 passengers, then GST is applicable. Mayank, your query is not clear. Please redraft. Priyanka, we will do a practical example. Please be with me. Tomorrow most certainly we will do. Adesh is saying, sir, the construction of immovable property, one cannot avail ITC of cement sand, then the property constructor. See, Adesh, it says where you are doing the construction on your own account. So if there is a difference, on your own account means I am getting my personal home constructed, then there is a restriction. But if a builder is constructing a building, flats, and the flats are being sold under construction, then but of course he will get the credit. So Venkat, I have already explained buy one, save more, offer discounts. How many times should I do that? I am saying you go out and you buy this soaps. Now you go out and buy Synthol tomorrow. Synthol usually sells 3 plus 1 free. Okay. So earlier they used to market it that you're paying for 3 soaps and you're getting 1 soap free. So now what they say is 4 soaps at the price of 3. Why the free term is taken away? The free term has been taken away because in section 17 subsection 5, as soon as you are supplying anything free of cost, the restriction says that no credit whatsoever of tax paid on purchase shall be available. Okay. What is the primary reason of utilization of IGST? This I have already discussed. What is done when goods are disposed on free sample? What is done when goods are disposed on free? It is reversed because usually. What is done when goods are disposed on free sample? Can ITC be reversed? Yeah, because when goods are supplied free of cost as free samples, then the ITC availed on such samples has to be reversed. Shashank, I have already given a detailed explanation. I cannot afford to again reiterate that. If the lecture is recorded, you can please go back and review it. Priyansh is asking, sir, एक सवाल है, जैसे IGST का क्रेडिट पहले खुद से, फिर सेंट्रल से, फिर स्टेट से सेट ऑफ होता है, ऐसे तो स्टेट को ज्यादा अमाउंट जाएगा टैक्स का, ये ठीक है, बराबर बंटना चाहिए. प्रियांश, ये जो आप कह रहे हैं ये गलत है. इसका जब हम प्रैक्टिकल एग्जांपल करेंगे तो ये आपको क्लियर हो जाएगा. Mayank is asking, what is an order of revision of GST? Not clear what you're asking. Please re-mention it. Sandhya is asking, input tax credit utilization is applicable for exam in new notification. Yeah, I believe it is applicable for your attempt. Okay. Thank you, Vrinda. Madhav is asking, sir, is cashback included in value of supply? See, when you ask this query, so cashback generally means that when I'm buying this mobile, I bought it suppose for 50,000 rupees, and the billing will be for 50,000 rupees, and the GST will be paid on 50,000 rupees, and the cashback suppose 5,000 will come at a later date. So that of course the cashback is included in the value of supply. So first, if we have to take IGST, and now I'll take from bottom. Nishta Mansal is asking, car used for transportation of employees from office to their home, is the ITC available? Nishta, here, if the transportation is mandated by the government, like in case of female employees, if they are traveling after late in the evening, then it has been mandated that the company provides them transportation to their home, and for that the credit will be available. Otherwise, generally no ITC available. Okay. Tarun is asking whether ITC is available on insurance. We have specifically discussed no credit available on health insurance and life insurance. Thank you, Nikita. Mohit is asking, while taking ITC for calculating 20%, ITC on blocked credit should be considered or not? So, Mohit, your question is this is a good question, and ITC on blocked credit is specifically something that you have to not avail. Okay, so while 20% you can do that on the entire amount, but at the end of it you have to keep into mind that no credit of blocked credit is carried forward in the availment. Thank you, Adarsh. Chandni is asking, cost incurred for trial run includes in value of transaction. See, Chandni, whatever amount is incurred for trial runs, that is factored in the cost of the product. Okay, so that automatically gets included in the value. Tanishk is asking, sir, is portion of ITC portion of ITC is available on car if used partly for office purpose and partly for personal? No, Kanishk, if the seating capacity is below 13%, no credit whatsoever is available. Tabassum, buy one, get one offer. See, I don't know why you all made such a big issue on buy one get one. It was a simple clarification. The law simply wants to say that when, suppose I'm getting an offer, this one pen was sells for 2000. Tomorrow the company says 2 pens at 2000, that is buy one get one free. Now, industry, by reading section 17 subsection 5, industry got an apprehension that when we sell buy one plus get one free, this will mean that one pen which I am giving free along with this pen, no credit can be availed by me on that free pen because I am supplying that free of cost. Government, please clarify, is this understanding correct? Government, please clarify, is this understanding correct? Government said, my dear friend, this buy one get one is nothing else. Nobody gives anything for free. This buy one get one is nothing else but two pens being sold for 2000 rupees. Earlier you used to sell one pen for 2000 rupees. Now you have decided 4000 rupees 2 pen or 2000 rupees for 2 pens. So this will not be, ITC reversal will not be required because buy one get one is nothing else but 2 products being sold at the price of 1. And that is as good as someone buying 2 pens separately for 4000 rupees, getting a 50% discount and net paying 2000 rupees. I hope this finally settles the issue that buy one get one was being made such a big issue by all of you. It is nothing else but it is simply a way of giving discount and hence the ITC eligibility will remain as it is. Sandhya is asking, if the ITC reversed, when should calculate the interest from invoice date or return submitted date? So, Sandhya, ideally, ITC is deemed availed when you file your return and hence it should be the return date. ITC on issue of free samples are blocked. Yes, Malvika, you are right. Thank you, Pallavi. Thank you, Mukesh. Har Kishan is asking, please explain free gift sent by head office to branch office. So, free gift sent by head office to branch office, head office to anyone, no credit whatsoever is available. Only one exception is there, that if you give gifts to employee up to 50,000 rupees, then that is an exception. Otherwise, no credit whatsoever available in case of free gifts. Akansha is asking, if dairy uses tempo services for delivery of milk product, can they avail ITC? I believe milk product is otherwise exempted from GST, and since it is exempt from GST, no credit whatsoever will be available because they are dealing in an exempt product. If milk is taxable or milk products are taxable, because even ice cream is made from milk, then certainly the credit of tempo will be available. Yes, Meghjeet, if the number of passenger exceed 13, then ITC will be available. If it is up to 13, then ITC will not be available. So 36.4, the restriction of 20% Nikita, in the subsequent months, whenever the credit is reflected, the credit can be availed. Karan is saying whether ITC available or input stolen from the factory store? No. If the goods are stolen, destroyed, no credit is available. Raghavendra, no credit available on samples. Chalu, no credit will be available on Maruti car if the seating capacity is lower than 13 persons and if you are not using it for further reselling or training driving or you are undertaking any specific activity. No credit will be available. Thank you, Mohit. So when I scroll, there is some issue with the scrolling up because it doesn't stay there. Okay. Rahul is asking, will they ask common credit problem in exam? It's rather better you directly ask what will come in the exam and can I share the question paper? So please, there is no meaning of such queries. So anyone's query that I have missed out and not answered till yet, please can you retype it, copy and paste it again? Because scrolling up is an issue. So I'll try and take it from the bottom. Mukesh is asking, capital goods life is only deemed 5 years. Even actual life is more than 5 years? Yes, Mukesh. Less than 5 years, more than 5 years does not matter. Legally, for all capital goods, it has been kept at 5 years. So Shashank, if it is carrying milk and ice cream both, then we need to follow rule 43. Okay, that is capital goods common for taxable as well as exempt. Any other questions? Any other questions? If any queries that I missed out above, can you please retype it or copy and paste it? Welcome, Tarun. Nikita is asking time limit for taking ITC. So, generally the time limit for taking ITC for any financial year, any transaction done in a financial year, the last date to avail ITC is by the due date of September of the following financial year. That is for financial year 2021, the last date to avail ITC is October 20, 2021. That is the due date for filing return for the month of September, or the date of filing of annual return. So generally in continuing businesses, it is always the September return is filed first, and hence the October 20 will be the relevant date. Muskan is asking, can you please repeat the treatment of gifts? See, repeating, it's simple that we had discussed in the morning session that gifts up to 50,000 rupees in value to employees are excluded from Schedule 1, which means they will not be treated as supply. If it is more than 50,000, then they will be treated as supply. No, Karthik. How can credit be available for car used for personal purpose? How is that practically possible? Akash, discount is always calculated before calculating GST, okay? Yeah, Mohit, we'll do a RTP tomorrow. Don't worry about that. Yeah, Ananthamurthy, that is your correct understanding, but I had restricted discussion to 20% because I believe that was the point up to which the amendments are covered for your exam. That is my last understanding. Now, what has happened due to postponement and everything, that you need to check separately. Rajendran is asking, yeah, ITC is available for office equipments. Consumables, there may be consumables because consumables, I believe you're talking about food and beverage. So no credit available for food and beverage. Okay, so Tabassum, buy one, get one free. I understand your query. So buy one, get one free. See, buy one, get one will only mean that it's the same product, na? So if it's the same product, then why do you need to go into composite supply or mixed supply? Composite supply or mixed supply will only get triggered when there is more than one kinds of supply. When it's the same product, it's basically that simple. It's a simple same thing in supply. Whatever Vrinda, practical or theoretical, always explain it in detail with logical reasoning. Agrima, works contract is considered as supply of service because government ka man hai. Raghavendra, in company, HR provide training and paid amount to apprentices. Can it avail ITC? Is apprenticeship is stipend liable to GST? Welcome, Priyansh. Shweta from Madurai is asking, sir, for payment of IGST liability, so Shweta, CGST is required to be fully exhausted. Only then SGST can be used for payment of IGST. You can go back and read the provision again. Yeah, Vidya, credit will be available even in case of door-to-door delivery. Credit, once availed, can be carried forward indefinitely up to the time business continues. I don't think so, Dixon. You can go back and check and let me know. Tejas, sorry, I have not been able to because constantly the queries are coming. Okay, so let me see. Is input tax credit allowed on construction of factory, building and office premise? So legally, strictly in terms of statutory provisions, it is not allowed, Tejas. But there has been a High Court judgment which has allowed it. So legally not allowed. Practically, you can contest it basis that legal provision. Cost of warranty, nobody charges it separately. So normal warranty is embedded in the cost of the product, Mansha, hence automatically gets included in the price. Extended warranty is a separate transaction, separately liable to tax. Yes, Mayank, ITC is available for courier services. No, Vetam Manithi, if you do some practical questions, you will find out that there is no double tax. So in Rule 42, there's a separate treatment, Rule 43, because first it is saying avail the entire amount of common credit on capital goods, and then it is asking to add to output tax liability. If someone is hired in a beauty parlor, that means hired means if the person is on salary, then there is no GST on salary, Akansha. And if otherwise, if any GST is paid, then yes, the credit can be availed. Okay, Harkishan, your query is not clear. Please explain. Raw material is entirely used for manufacturing samples. Okay, entirely used for manufacturing samples. So if it is entirely used for manufacturing samples, no ITC will be available. A very simple common case is medicines. In medicines, batches are supplied as samples across India to doctors free of cost, and the entire amount of ITC on raw material is written off. Instrument box is a composite supply. For an employee, by and large, the credit is available if it is in the nature of, if it is covered under section 17, subsection 5, restricted credits, then the credit will not be available, Sushmita. Otherwise, largely, the credit is available. Okay, so last three queries. If CGST is exhausted, both for CGST and IGST liability, and still remains, why can't it be used for SGST? Because Nitya, CGST is central government's tax and SGST is state government's tax. Okay, that's the basic difference. Mayank, he can continue as long as he keeps complying with the conditions prescribed for the composition scheme. Okay, so I believe we have covered a whole lot of queries, and now there are some roving queries about something I believe which is not very important. So we'll put an end to our session here, and tomorrow we'll meet again and we'll cover up the rest of the chapters, and in the end of the session we'll cover up all the amendments once so that we can cover up all those which have been left out, and thereafter we'll also do the RTP, which is relevant prescribed by the institute. So a very good night to all of you, and see you again in the morning. Thank you everyone. Good night.